Good evening, YouTube. Good evening, X. Good evening, Jackson. Good evening, Jackson. Jackson, I've already given you food. You just need to chill out, Jackson. What's your deal? Come here. Let me see you. Let me see. Hang on. Jackson, what is going on with you? Gosh darn it. He has to eat every time I do a live stream. I just give him a little bit to keep him busy, but my gosh. All right. Well, welcome to the channel. Let me remind you, everything you hear tonight is not financial advice, for fun and entertainment only. Consult a licensed professional for all your financial planning needs. There's some good ones out there. Hey, DD, how you doing, bud? Tonight is the daily factor. So let's talk about the daily factor. Well, first of all, let's look at the market. Let's see what futures are doing. Who cares about the daily factor? Let's look at futures. Last time I checked, I haven't looked since like 4 o'clock when I got off my other live stream. I've been busy doing other stuff. All right, so let's look at this. Yes, I am well trained. Jax has me trained, for sure. Look at that. ES is up 1.16. Heck yes. All right. So maybe we can mount a real rally that doesn't peter out this time like it did last week. Let's just do something real oversimplified. Just draw a trend line from the last two peaks. Did I hit that? Yeah, that's pretty close. So that would be a major, that's what we want to avoid. We want to avoid running up to 668.41 and then petering out, making a lower high. Hopefully we can take back this trend line. We shall see, though. Let's get a shorter term chart out. It's still moving. I wonder if it moved up like right after the announcement of NVIDIA's earnings, but no. Well, yeah, it did. It actually, because there was 3 o'clock. Here's 3:30. Here's 3 to 3:30, or 4 to 4:30, 4:30 to 5. And right there is 6 to 6:30. So anyway, we're moving up. Heck yes. Probably going to try to check this POC here at 67.61. So that's where we get a first down. If we can keep the drive alive, we can try to take back the trend line. We'll see and get to this other high volume node or point of control. And then there's a minor one in between there as well. This line's important too. That line is important too. That's where we fell out of balance, it looks like to me. Anyway, so that's good. Let's check out the NASDAQ. Jack, don't look at me like that. You ate like 5 times today. You're fine. All right. Probably I could draw a trend line on the NASDAQ too, but it's up here somewhere, whatever. I'll do it tomorrow. Need to take back 25.5 probably, and also 25.350 first, then 25.5, and then eventually 25.8. One step at a time. Hope we don't rally and peter out. We'll see. We'll see. We need Bitcoin to join the party. We need Bitcoin to join the party, and it looks like it has. Bitcoin so far, Bitcoin is so behind the scenes. It just needs to take back its moving average, then eventually get back up here to 95 and hopefully not peter out. And then 99 is going to be a major area as well. All right, so that's that. Let's talk the max factor now. So what is the max factor? The max factor is my own proprietary metric. I think that total return could be deceiving, and it's not the best measurement of these high yield funds. It's a lot better measurement than yield. Yield's the most deceiving. But in any event, the max factor looks at yield because, of course, everyone wants high yield. It factors that in. It tries to identify companies that give you as high as yield as possible at a reasonable cost. There's a cost to a high yield. The yield's a tax on the future upside of the asset. Some funds, it's worse in some funds than others. And that's what the max factor tries to identify as the ones that represent a good risk to reward ratio, reward to risk, however you want to look at it. So every Saturday I have the top 20 show, but every night we have the daily factor about this time. And The daily factor, we take a subset of the 150 or 160 ETFs we study, and we look at that subset. Tonight is going to be crypto. I've been saying surrogates a lot. How about crypto proxies, or high yield ETFs that use some type of crypto based asset for an underlying. All right, so let's get in the middle of it and let's meet our contestants. Good evening, Norman. Thank you for being here from the West Coast. I appreciate that. It's only 5 o'clock over there. All right, so here we go. All right, we'll start by yield chasing like we always do. High yielders XBTY yielding 154%. That would be nice if it didn't come with the associated risk. We'll see. The max factor will take a look at it and see, how it shakes out. Anyway, the price has gone from 22 to 12 and a half, 22 and a half to 12 and a half, basically this quarter. So it's not been a great quarter. It lost 50% a quarter. Not quite 50, more like 40%. So at that rate in a year, well, it'd lose 160% in a year, right? If you buy it, you're going to end up owing money, right? I'm just joking. All right, YETH. This is kind of the same deal. This is down about 30% too, dropped from 32 to 17 and a half. But the yield's good. The yield's good, but maybe that upside's getting taxed a little too heavy. Who knows? XBTY is like living in California. YETH is like living in New York. YBIT's like living in New Jersey. It pays a lot of yield. It's a lot of fun or whatever, but there's a high cost to pay to live there. Anyway, this one's not as bad on NAV. It's just dropped from 992 to 7. This is only down 26%. And for the past year, it's only down from 15 to 7. So it's about 50% down on the year. But it's been a rough go for Bitcoin. Anyway, especially this quarter. YBTC down from 46 to 31. Now it did pay a 70% yield. Speaking of that, let's just look at the underlying here. Let's see how rough the quarter's actually been on. I'm going to use IBIT because it's an ETF and it's what most of these trade. There's probably ones that trade other ones. And then I'll just plug in YBTC because it's the most recent one we're talking about. Then we needed to go, that's since inception. Boy, it has been a good run for Bitcoin since inception. Look, IBIT's up 125% in 1.8 years. But the quarter has not been as auspicious. It's been more suspicious, to tell you the truth. More suspicious and less auspicious. All right. So, that's not right. All right. So let's look at it on the quarter and see what IBIT's done on the quarter. Well, IBIT's done well on the quarter too. No, that's since 2024. My bad. We have to adjust the date on this as well. Okay. Well, it's, the underlying itself is down 20%. So YBTC's got every single bit of that downside. So in any event, all right, it's been a rough quarter nonetheless. Let's go back to our lineup. All right, then we have Maxi paying a reasonable 53%. So it has less tax on the upside. It's, anyway, but it's dropped from nearly 29 to about 17. So that's not great. Down 40% basically. BCCC paying a 48% yield, dropped from 25 to 19. We have Baggy dropped from 55 to call it, or 56 to 39. So that's about a 30% sell-off right there. But pays a 40% yield. BTCI pays a 36% yield, dropped from 59 to 46. On a yearly basis, it's down from 61 to 46. I want to see what Bitcoin's done on a yearly basis, just for comparison purposes. Or I should say what IBIT's done, not Bitcoin. Wow, barely up. You pretty much call that flat, up 1% over the past year. Pretty much called that flat. All right, back to the lineup. Where we look at Baggy, BTCI. BTCI pays 36. It's down 21% on yield. You can see the less yield you pay, the better you do on NAV, just because of math, or just because of the way NAV depletion works. Anyway, this is down from 56 to 41. That's only a 27% downdraft. And it's only paid a 29% yield. And then I throw these in here. I love these things. STRC, STRD, STRK. Those are preferred stocks based on MicroStrategies, and they're tied to the level of MicroStrategy stock. Anyway, this STRC is amazing. It pays about 11.5%, but look at that NAV, 94 to 94. It's actually up 50 cents. Then we have Stride. These are just have different mechanisms. Stride is actually down from 79 to 66. And then we have Strike. Strike's all the way down from 95 to 76 and just pays an 8% yield. That's not very attractive. Just on a comparison basis, I would much, if I want to be down 20%, I could get BTCI and at least get a 36%, distribution out of it. In any event, SSK is a Solana staking, and this thing's down big time also, down about 28%. So let's look at the relative stability, and it's going to be STRC. That mimics a stable coin is what that does. But in any event, then it goes downhill from there. The other preferred, STRD, is about twice as volatile as or call it half as stable. Market stability is a 1, so this is 45% as stable as the market. BCCC out of all the high yielding ones is the most stable at 42% the stability of the market, meaning the price doesn't move as wildly. It's just measuring price movements. Then we have Strike, 39%. Then it goes down from there. XBTY, surprisingly, considering its yield, it's fairly stable as far as its trading characteristics, let's just call it. YBIT has the same stability as XBTY, but YBIT has twice as good of NAV return. I know which one I'd rather have. XBTY it's I guess because Bitcoin's kind of flat and it's a leveraged investment, it's not doing great. YBTC here has the same stability as those other ones. Then we have BTCI, a third as stable as the market. We have BIDI, about 31% as stable as the market. Baggy is 30% as stable as the market. SSK is about a fifth as stable as the market, or meaning it's 5 times wilder. It is based on Solana. Then we have YETH based on Ethereum. It's only about a fifth as stable as the broader market. Then we have Maxi. Now, Maxi's a hot mess, but it does yield 54%. All right, so it's obvious which one's going to win. It's not fair to compare Strike with these other ones, or Stretch. I'm sorry, but I just want to eyeball it. Which one would I rather have? If I couldn't have Stretch, obviously I want the highest yield and the best NAV return. So, it's BTCI. Because you get a 30 out of the ones that are elsewhere, and not according to my metric. According to my metric, it's Solana, but I just think that metric's wrong. I don't know. I took Solana out last time because there's no way that's. I'm going to take Solana. There's a wrong number in there or something. So, but of the ones that are truly Bitcoin surrogates, proxies, whatever you want to call it. So we have BIDI getting about a 30% yield and about a 27% loss in NAV. That's not great. But BTCI, you get about a 36% yield with only a 21% loss in NAV. And you have Maxi here getting a 53% yield, but bleeding off 40% of its NAV. There's just not a lot of good choices in here just because Bitcoin's down, right? I mean, I like Baggy. Baggy's one of the ones where I read the prospectus and I liked it and I like the idea, but it's, if you just looked at Baggy to BTCI, and BTCI is NEOS, so it shouldn't surprise. I think it's NEOS, right? Shouldn't surprise us that NEOS does a good job. It looks. I'm just saying, editor's choice is BTCI. What do you guys think on editor's choice? You say BTCI, yeah. I mean, BTCI is a good one. That's a good question. Okay, so that the reason how it's supposed to stay around there, it has something to do with because they'll lower the NAV if they have to protect. They'll lower the yield if they have to protect the NAV. That yield's not guaranteed. So let me tell you something. Mike Coe, the Yield Max guy, he has his own show, his own podcast, and it's on YouTube. I watched it today, and he explained how all of these preferreds worked. In depth, and he showed you. He went into his Bloomberg terminal and showed you each one of these preferreds have a different strike price where they become active, and so but based on where and that means how far MicroStrategies has to get for the preferred to be in the money. And he explains the mechanism of it a lot better, or because I don't really understand that much, but it's somehow they're mimicking a stable coin. And, what they do is they don't guarantee the yield, but then they have other ones that mimic like a high yield asset. They maximize the yield, but they don't guarantee the NAV. So, but basically it's, Michael Saylor went to, I guess, a bank, and he promised MicroStrategy shares. He's trading shares for these preferreds, but not now. He's trading shares at a future price. A preferred's almost like an option. Let's do this because I think this is really important. This is one of the best things I've ever seen. I even thought, one of the best explanations I've ever seen. I even thought about making my own version of it and making content for you guys, just basically reporting on what he said. I'll just let you guys watch what he said though. I'm going to just find the, let me just find the video so I can put the link up here. For any yield, he explains exactly the mechanism of these things. Like Co and what's it called? It's called Open Mic is the name of his show. It's a live thing and he takes questions a lot like me. Somebody will ask a question, they'll get him talking about something. He gave some really good looking trade ideas on MicroStrategies. Also, it was about half the show was about MicroStrategies. I would really recommend it if you're interested in diving deeper into these preferreds. Yeah, there it is. So let me get the link. I cannot tell you how good it is. I really enjoyed it. I watched every bit of it. It's in depth. It's not, he doesn't sit around and crack jokes like we do and stuff. He's just like going to a class. He's very, very, he thinks hard about everything he says. He doesn't say the first thing that comes to his mind like I do. But anyway, seriously, that is a great, great video. You can also search it by Mike Coe, Open Mic. But I don't know if you can get to that link. That's probably not the best place to put the link. I probably should have put the link in the comments where somebody could click on it from the comments. Anyway, but you guys, the ones of you guys are interested will find it. But yeah, that one, the stable fund, and there's also other influencers have done, because I watched another influencer and they explained it. But yeah, it has something to do with, I think it's so far out of for one thing, I think it has a strike price of like 1,000. So it doesn't get converted to MicroStrategy shares unless MicroStrategies goes way up. But until then, it just basically collects interest. But if MicroStrategies keeps going down, and as it gets further and further from 1,000, it has to get to 1,000 by like 2029. As MicroStrategies goes further and further from 1,000, the odds of that going in the money get lower and lower. Well, the board, Michael Saylor and his friends can cut that yield from 12 to 6 or 12 to 0 if they want to. And their goal is to protect the NAV. They can cut it all the way to 0 if they have to. So I guess so it's not like you can't lose money. If MicroStrategies goes down and never comes back up, that thing will stop paying a yield. I mean, so it's a risk just like in any other asset. Hey, Dylan, how you doing? Thanks for being here, bud. Drop it in the description too. Yeah. Yeah. I don't know how to get to the description from here, but I guess I could go to, that's good advice though. I guess I could go to your videos, meaning my videos, and I could run in here and do that real quick. But I couldn't recommend enough. And even if you don't care about preferreds, but you're an option bro, he showed a trade you could do where you could sell puts on MicroStrategies, and it would have to go, it's a put ratio spread. It would have to go to like 120 before you would have to buy it. And you could get an income. If it goes nowhere, it goes up, you make money. The only way you lose is if it goes under 120. If it goes to 100 and you have to buy it at 120, you have a $20 loss. It was a great trade. For option bros, go watch that. That was it. And then he got into the preferreds also. Like I said, I almost thought about just having AI make a summary of it and then making my own content, but that'd be kind of a jerk thing to do. And I don't need content that bad, but I mean, you guys need to hear this. It's great content, must watch content. Here we go. Okay. All right. So let's talk about some other stuff. Let's look, I guess, I'll answer questions or whatever. You could also look at stocktools.app. And I have some things to look at. Let's look at some other. I'm just making sure. Okay, here we go. Oh, we've already talked about that. Okay. Hey, Health and Wealth's here. It's always a pleasure to have another creator in here. Health and Wealth does a great job. I know all you guys watch his content. But anyway, I appreciate it. Oh yeah, okay. You guys are joking with yourselves. SMCC is like living in Florida, Yeah, I was trying to make a joke. I mean, I always like to compare stuff to things, and sometimes I do inappropriate whatever. But the high tax rate, I don't know. But that's what it's like. A fund. The other night I was making it kind of an inappropriate comparison, but a fund that pays a super high yield is maybe the most fun to be in the world, like having a Lamborghini. But every time you go to the gas station, it costs more to fill up because it burns through gas, and your insurance is higher. Some of these high yield funds, like XBTY, is like the sports car of funds or whatever, or XBTY is like living in Southern California. It's awesome to live on the beach in Malibu, but or whatever. But your taxes are sky high, the crime problem, whatever. You know what I'm saying? There's other costs to living there. You have to get private security. You can't send your kids to public school. You have to send them to private school. I mean, so anyway, I'm trying to make some more appropriate comparisons, but I love to make a comparison. So I bet Rod did a good job. He covered STRC and covered, they can't decrease dividends a lot in one period. Okay. That's good to know. But I was trying to think, I think that's the way they keep the NAV stable, because if they have to decrease dividends to keep the NAV stable, I think I read the perspective. I did a content on it also when it first came out. I have a video somewhere. But yeah, it's something like that. And it has something to do with where the option becomes effective. But then there's some ones that are kind of middle of the road. They're a little bit closer. Then there's some ones that are right at the money. Go watch Mike, go watch Rod, whatever. No, but that's good to know, Dylan. That's good to know. The V12 analogy was perfect. Yeah. Or, it's, yeah, I mean, you're going to have lots of fun. Like you're going to have lots of fun in a Lambo, but there's going to be a high cost to it. Like XBTY is a lot of fun because it pays a gigantic yield. But, in a down market, you're taking what I'm saying? You're taking the yield. So a down market is like driving your Lambo on ice or something, because then you're going to wreck it and have an insurance claim or have to go to the hospital. So, yeah, and that's what, but it would be great on a sunny day. Well, XBTY, we get back in a crypto bull market, like we were in earlier this year. XBTY probably would do pretty well, or any of the other high, or Maxi. Maxi's kind of a more dangerous one too. Yeah, that's what I'm trying to say. Okay, so let me show you some other stuff. But I'd be happy to take questions. We can look at my portfolio. So this is the daily changes on it. This was about at 245. I was up a little bit on my hedge, YQQQ, and I have another hedge, Salty. I was only up 2 basis points on Salty. And by tomorrow, I'll be down on Salty probably, hopefully, because the market will be rallying, but that's fine. I mean, I only have 6% Salty and 11% or 13% YQQQ. But if we could get a bullish market, my blocks and my K yield and my QLDY, wherever that is, can really outperform on the upside. ULTY may not outperform on the upside, but if we get into a really bull market, it will at least become more stable and still pay the huge dividend. Part of the outperformance or whatever comes from the dividend in that one. But anyway, so we get back into a bull market. I think the four bullish bets I have, and WPay. WPay, ULTY, K yield, and blocks just need to rage, because unfortunately I've got myself loaded on hedges. But like I say, I hope I don't end up needing them. I hope I'm mad I got him, but that's the cost of a hedge. Is it's gonna, if we do rally again, now they're gonna kind of drag me a little bit. But I wouldn't be surprised if we still aren't out of this. I mean, I'm taking it one day at a time. This is not a great looking market. But hopefully we're out of it at least for a couple of days, and we'll rally up. But we got to take it one day at a time. All right. So, but as far as the overall portfolio, then I mean, look at blocks. Was blocks really up to? This has got to be an old one. Blocks wasn't up 2.2 today. Anyway, whatever. But no, it wasn't. Okay. So let's look at, I thought you guys might be interested in this. This is the diversified divas. So let's look at the total returns. All right. ULTI is off 31. And this is since inception, ULTI and K yield. So October 31st, since Halloween. So here we are on the 19th. What is that? 20 days later. 20 calendar days, which is probably more like 16 or 17, business days. Anyway, trading days. Anyway, blocks down 26%. LFGY down 20. ULTY down 16. WPay down 12. This includes dividends and NAV. All of them are down on NAV, but the dividends add in. But anyway, even old GPTY is down almost 11%. Now Chippy's doing well, but it's still down 7%. QLDY is down 6%, and the Qs are down 5%. So let's look here at the highest dividend yield, and there's a couple of them that pay dividends tomorrow, so come back tomorrow and this will change. But right now it's LFGY, ULTY, and WPay. Those are high-paying ones for sure, but I think ULTI will jump up towards the top of the list as well. And I think the rest will stay down here. K yield pays about what QLDY pays. So K yield and QLDY are like living in Texas and Florida. They nice place to live, whatever, but you don't have many state taxes. It's like driving a Toyota. Insurance is a little cheaper. Still have a good time. But there's not as much upside as there is living in Manhattan or, Malibu or wherever. Anyway, so the average annual total return is down 13% out of this group. So, oh man, best performer is the SPY. Okay, well, it should show us the best performer other than the SPY or the Qs, I guess. Worst performers, ULTI. I have finally talked with Matt from ULTI, and I really, I hadn't made that serious of a mistake. Everything's cool with him and I, and we were talking in DM, and he said, I'd be glad to come on your station sometime. And so we're trying to set something up. But I showed you something this morning that I was worried about. I made a major mistake, just a misunderstanding. So anyway, then today's best was Chippy. So right here, I have the daily return, total return, the dividend yield. Right there's everything you need to know. But looking at today's change, you know, well, that's not today's change. What are you guys doing? Full period. Okay, well, they have this one messed up. Anyway, whatever. It's all good. It's all good. So what else do I have for you here? But yeah, here's K yields. If you guys want to look at K yields positions, I mean, here's all the positions they have. So look at this. K yield has SIL and GDX. I think I think ULTY has GDX in there right now also. And then they have a bond fund, a triple leverage bond fund. Anyway, Howmet Aerospace, Broadcom, AMD. This one ought to be doing pretty well tomorrow because NVIDIA being up should raise AMD and Broadcom, I would think. And what's the one that was up huge? There was one that was up huge. Was it Cipher Mining? Yeah, Cipher Mining. So unfortunately, I'm looking at their holdings on K yield, and it does not look like they have any Cipher Mining. Anyway, hopefully a rising tide lifts all ships, whatever. All right, so here's ULTI's holdings. If we want to take a real quick of that, lots of cash, but then they have Galaxy, SanDisk, QRE, whatever that is, Oscar, Riot, Viking Therapeutics, SharpLink Gaming, Skywater Technologies, Kohl's, Bullish, Solar Edge, CleanSpark, Mara, Lemonade, Nano Nuclear, Terrestrial Energy, SMR, Global Star, and PGY, Pagaya, I don't know how you say it. And then we want to look at their option positions. They kind of what they're doing here. Let's organize it by alphabetical. So with every stock they have a 4-leg option position. They sell a call spread and they sell a put spread. And so basically you could think of like an iron condor. You know, an iron condor, you sell calls above the market, puts under the market. You want the market to stay in a range. So that's kind of their strategy with a couple of caveats. They have that strategy on, plus they own stock at the same time. So really they just still want the market to go up. But should the market stay in a range, they'll do all right on their income component. And they have one other important variation. On one of the legs, they have double contracts. Well, the double contracts on the out of the money put, that defines their loss. That makes it a risk defined trade. So because they have stock on these. So for instance, let me show you this. Let me show you this. I just put in an example trade in. It's up $93. I should have done it in real life. But I just put in an example trade in bullish. But so they have stock. We could turn off the stock, and maybe you'll understand this a little bit better. Well, okay, let's turn off the stock and let's turn off the double puts, because we don't need double puts if we don't have stock. The double puts is to keep our stock from cleaning us out, to keep us from bag holding. It's bag holding prevention. So that's what the overlay looks like. That's typically what their overlay looks like. So, and the thing about this overlay, it's done for a credit. And the way they do it, it should even be a credit, even including the double puts. Yeah, it's a credit including the double puts. So you get a credit for putting this on, but then really you just want the price to go up as high as possible. You see this white line behind here, that's the profit and loss graph with the stock turned back on. Right now the stock's turned off, but I'm trying to, but anyway, let's turn the stock back on. So it's like it's a real interesting thing. It's no one else is doing this. It's definitely an interesting trade. But basically they have a trade where they can make unlimited on the upside, just like blocks, just like QLDY, or similar to blocks and QLDY, not just like. But they have pretty much unlimited stock type gains on the upside, but they have defined risk on the downside. So they get some of the benefits of owning stock, which is the unlimited upside, but they get some of the benefits of buying an option also, which is capped downside. And then at the same time, they also get $146 credit, and they can get that credit once a week. But at the same time, they own the shares. and they don't get the shares called away if it goes in the money or whatever. They have unlimited upside. So, but in any event, it's a genius play. I like it. I can't wait to get Matt Holcomb on the show, but that's kind of the Reader's Digest of it. Did something happen in the live chat? What do you mean? The stream's offline? Really? Can you guys see me now? What time was the last message? The last message was 2 minutes ago. Anyway, I mean, I think I'm still online. I still have a signal and stuff. Anyway, but sometimes it goes down. I have my Wi-Fi repeater right here. Anyway, blocks. Yeah. Hey, Jim. Blocks. So blocks we've already spoken about. Blocks is part of the Diversified Divas. I don't know. Well, and I have it on a couple of spreadsheets, but blocks is our second worst performer of the Diversified Divas, which is ULTI, blocks, LFGY, ULTY, WPay, KYIELD, GPTY, Chippy, and QLDY. But it's been a rough go because blocks is 100% in Bitcoin and Ethereum, and Bitcoin and Ethereum is in a bear market, in a definite bear market. Maybe it'll come back though. Maybe the bear market's over. I mean, maybe but yeah, blocks has been, same thing goes. ULTY is about a third correlated. I mean, ULTY has a lot of Bitcoin and meme stuff. LFGY is all Bitcoin. It's getting killed. ULTI is probably, I'd say, a third Bitcoin related stuff. So in any event, but also we can look at blocks as positions right here, or we can look at what they have. We can look at a chart that shows what positions they have on. Yeah, blocks was down today, down 2.6, but the average stock was down 3.2. These are the ones that killed them. MicroStrategies. I wonder if MicroStrategies is up in the post market. Let's go see. Probably not. Well, with Bitcoin being up, it actually probably is, because Bitcoin's really blown up. I don't know if it's trading here, but they aren't showing any aftermarket prices. You could go to Robinhood and check it out, but I would imagine, since MicroStrategies is all Bitcoin and Bitcoin is currently up 1%, I'd imagine MicroStrategies hopefully will follow it tomorrow. I mean, but Bitcoin goes up this much all the time and lately, and then it peters. So we do not want to see it peter again. If it peters again, it's probably going to make a new low. And if it doesn't find support down here, it's probably going to 75, 76. And it's not me saying that. Mike Coe said that on his show today. He was giving numbers out, and he said something about 86. And if it gets under 86, 75 or something. I have 88 on mine, but anyway, yeah. So, but if we could sustain a rally here, then MicroStrategies can hopefully start sustaining a rally as well. I hope that's what you're asking. The live chat went down. Okay. All right. Is it back up now? I guess it's back up now, or maybe not. But anyway, for a child restriction thing, I wonder if I'm getting trolled again. I mean, I wonder if I was getting problems with people wanting to joining the stream right here, but I haven't seen anyone tonight. Well, I'm sorry that you guys lost me. And you lost video too? All right. Well, what do you have now? Can you hear me now, or can you see me, or is it still down? I don't have my phone on me, but no, I don't think any of you guys have my number anyway. Hey, Bon, how are you? I didn't notice you were in here. Margaritas and tacos on the West Coast. I'm glad to hear that. Yeah, it's happy hour, right? Anyway, somebody let me know in the comments. Video works, but you can't chat. Okay, well, I can still see. I can react to your chats. Let me try this. Maybe you can see the chats on the screen if I do that. I'll make it wide or I'll make it big. All right. Well, maybe you could see that. Only X works, huh? Okay. Well, maybe it's Cloudflare or something. I'm just about out of stuff to say. I just wanted to show the graphics I had up here. I really don't have much else to talk about. Unless I think of something, or unless you guys get me sidetracked and yeah. Okay. You could post on X for me. So Zombie's here. Zombie is the GOOW fan in the house. Yeah, Zombie. So Zombie's in good shape. He says everything's fine on YouTube. Maybe it just went down for a while. My Wi-Fi extender's plugged in and it's right next to me. Sometimes Jax unplugs it. So I think it's good on my end. Heck yeah, I remember you. I have a really good memory. Not really good memory, but especially on this, all of you guys are like friends, and I see you guys, I'm live 3 times a day, so I try to remember names. I even know some of you guys' first name. Like, for instance, Bobby Taylor's never been in the stream before. I've never, okay, I'll go look at that. I think it is enabled, but I'll go look at that. But yeah, Bobby, I've never seen you in here before. I mean, I usually know if something's new, and it could have been. I mean, Bobby could have been in here before, but I just recognize new names. And I remembered you, Zombie, because of the other night and you like Google. Okay. So yeah, thanks for the advice, Bobby. So let's go. I've never had a problem having to do that. It says, yes, it's made for kids. Gosh darn it. I should put, no, it's not made for kids, right? Or something. Maybe that's it. I'm sorry. I forgot to check that. Oh my gosh, my bad. It says, do not restrict my videos to viewer. I know I always put on, no, it's not made for kids, in case I used to check it on, yes, it is made for kids, because I thought that meant it's going to be clean and family friendly, but no, it's not. So I think you're supposed to check no. But I never restrict it to viewers over 18. Maybe that will help. Let me hit save or I don't know if that's, oh yeah, let me click back. All right. That should be good. That should be good. I wonder what's going on. Chat's back on. Okay. That's what it was. All right. Good call, Bobby. I appreciate it. Good call. You guys are back. All right. Well, if you guys don't ask me, if you guys don't come up with something, I'm going to bow out because I'm tired and, I'm getting behind on original content. I'm doing good at talking to you guys 3 times a day. But I need to make an original video. Did you ever look at the additions? I promise I will tonight. I know I got sidetracked on ULTI and K-Yield, and then I put out a video, and then right after that, the fund manager from ULTI texted me that I got something wrong, and so I've been trying. So no, I did. I'll look at it tonight. I'll update. What I want to do is I want to start making a standard graphic kind of like this. It just looks professional, has the positions, portfolio allocation. So it won't have to look at the spreadsheets anymore. This is my test case. And, then we have, stock positions and option positions. So I can go over here and I can, we can look at calls only, whatever. Yes, I will generate a graphic like this for ULTI or ULTY. And really, I'd like to generate one for blocks as well. And really, I'm going to try to drop the terrible trio or whatever. And really, we could do one for Salty and one for LFGY. But that's what I got sidetracked on this morning. It took forever to get the prompting right. But now that I have the prompting, I'm going to go in and tell them to do the same thing on, 5 or 6 different stocks. And so then we can have the positions right here. And then we can also have this. I really think this is cool. The total return comparison and the daily returns. For some reason, the daily return's not working right now. Let me show you what I really like on daily returns. I like the way my spreadsheet chart does it better, actually, because you see every day is like a group and you can kind of judge it by the, look at this. I guess I need to tell AI to make it like this, but you can see that today was a little bit worse than yesterday. I mean, we had a few more up, but the ones that were down a little bit more. Then you have some days where just the market barely moves, and then some days it's just a washout. I mean, on that day, ULTI lost 15%. I mean, my gosh, 15%. You got to be kidding me. That's got to be an error, but I've checked it a million times. But yeah, so I'll get all this stuff working. But yes, I will look at the ULTY trades, and I have some more information on them. I heard the Wolf Financial Space today, and that same guy was talking about Mike Coe. He described. I've been telling you guys that ULTY is doing a 3-leg collar. Well, he described it in a different way. It's basically a put ratio spread. And I'll show you guys, and we'll talk about it. We'll talk about it tomorrow. But anyway, so that's the whole reason I don't want to do this live anymore. I want to make the Diversified Divas a separate recorded show, and I released one this morning that just compared ULTI and K yield, and it only got like 200 views. It was terrible, but I'm saying it's going to get better. And so I'm going to have a recorded show where it's diversified, where it's this information about these funds, the option positions on every day. And then whenever I do this show, we'll just, we'll just we'll do the max factor, and I can answer your questions. But I've been trying to squeeze too much into the live streams. So yes, but anyway, that's a long way to say yes. I'll look at ULTY's positions and make a report on it. All right. Japan's up 4% right now. Heck yes. How do you think a Fed rate pause will affect the market? Well, I don't know. Are they going to pause? Or, I mean, I heard Trump today say he was going to. I didn't hear it. I saw on the screen on CNBC, it came across the bottom, and they had to blur out. But he basically said he was going to fire Jerome Powell's butt. I think it was when the press was talking to him in the MBS, gaggle or press conference, whatever you want to call it. He said I'd like to fire Jay Powell's butt. Well, he didn't say butt, but anyway, hey Marcus, how you doing, bud? So you hear it's 50-50. Well, I don't think it would be good, but here's the other thing. The market has probably been selling off this whole time because they're afraid that'll happen. So it may be like the NVIDIA earnings. It may have sold off enough in advance where it may not be as bad. I don't know. I don't know. I really don't know on that one. What do you think about it? What do you guys think about it? Yeah, and we have jobs reports in the morning too, and the jobs reports have been terrible lately. And yeah, the economy is not the market, but the economy is not doing great. The market is doing really, other than Bitcoin, the market's fine. I mean, it's 5% off all-time highs, 6%, or no, even after today, like 5%. So market's fine. Bitcoin's screwed. One of them's right, one of them's wrong. The economy's not in good shape. I don't know. I mean, from a selfish standpoint, just because I'm an investor, I want them to lower rates. But I don't think it's the right thing to fire Powell and put somebody in there that'll drop the rates to zero. There's a cost and a benefit to anything you do. So, but yes, I do hope that Powell will lower them incrementally, and the next guy they put in will keep lowering them incrementally. But we don't want to cause some type of other problem on the back end. Yes, I will put the PayPal in my description. That's a good. Do you want me to do it now? Or are you trying to? But I'll do that from now. And I do that lots of the time. I do that, or really you can put it in the first comment. But I just was in a hurry today. But and I also just try to remember to say it before I sign off, just to remind people. But yeah. But I'm excited though, because on the 21st, I get my biggest check I've got. You guys have been instrumental in helping me with my station. We haven't looked at my monetization in a while, but I like to share with you guys. But you guys and my guys in Discord have given me all kinds of advice and helped get me back on track. Back in like April and May, the station made like $29 worth of advertising revenue. And this month it made $389 or something. So I've 10x'd since then. And a lot of it's because I got better graphics. I'm using AI. I'm not so focused on the spreadsheets, but a lot of it's these live streams, I think. And you guys have really, really helped. But I'm so proud of my station. But yeah, if you want to, but I still always take encouragement from you know, look at this, 135 views, and this is on just this live we're doing. But I wanted to show you this. I used to do this on the Friday ones, but I'm just so proud of the trajectory of the station. So yeah, this is for next month. So I made 389 last month, and I'm on pace to make 428 this month. I'm just killing it. But that's the good news. But the bad news is that's the other reason I made money is I increased my expenses. I ordered 3 different AI packages, the big packages, and then I have the maximum package on StreamYard. But that's enabled me to stream to YouTube and Twitter at the same time. I could even stream to Reddit or Facebook also. So yeah, that's the thing. I just needed to invest in the station and start making some better content. But let me show you this. I'm really proud of this. Look at this. Look at this subscriber count. It's just gone. I mean, it's just doing great lately. Let's look at this. Last 365 days. My station was dead. Look, in March, in May, I had cancellations. I mean, you know, I was totally stagnant, making no advertising revenue. I made like $29 in 1 month and like $59 in May. I think 29 in April, 59 in May. But then I got my act together, and it really kicked in around September and October. And that's when I really started investing in the station and trying to make better content. But a lot of it's because of you guys also. And I certainly appreciate that. I certainly appreciate that. All right. Well, all right. You love the view of the red and green when you cover different. Yes. Okay. That's my favorite thing to do. This is what I bring to the, I think this is the one thing I bring that most other influencers don't, is being able to explain the option strategies. The red and green is just the profit and loss graph at expiration, or actually you can change it. The red and green is the profit and loss graph. That's the profit and loss graph now. So like tomorrow. But then what you can do is, because options decay, the profit and loss graph changes a little bit. You can roll it forward, you know, you can roll it forward until expiration. The profit and loss graph looks like that. But these guys usually manage early. And that's why I was showing they've essentially created synthetic stock. This is ULTI. They've essentially created synthetic stock. It moves like stock on the upside, but not on the downside. And that's different from blocks. Blocks has created synthetic stock that moves like stock in both directions. And you know, and so, but yeah, that's my favorite thing to do, to explain that. So what I'll do is whenever I do the ULTY trades, they're doing a new complex strategy that I've been calling a 3-leg collar or whatever. There'll be more of that to come. I'm going to explain how that works and stuff. But yeah, that's my favorite thing to do. That's my favorite thing to do, is explain how that works. Does anyone in here own people have asked me that before, MTPLF? I look it up every time and I forget what it was every time. It never fails. And then I go, oh yeah, it's that thing. It's that thing, MTPLF. Is it in it? I won't even guess anymore. I can't find it. Maybe I typed it in wrong, or you tell us what it is. Is it a Grumpy will tell us. Oh yeah, it's fintech, a Japanese company, Bitcoin treasury in Japan. Yes, we talked about that last time. We talk about that all the time. They own 31,000 Bitcoin, and they are ranked number 4 globally. Well, okay, let's look at it somewhere else then. Yeah, every time I look at this and forget. So it says over the counter. Is it not over the, maybe it trades over the counter here in America, but it's a Japanese company. I thought it might be an ADR, American Depository Receipt, but it probably is. It's probably an ADR that trades over the counter. Meaning it's not on a listed exchange, meaning it's more risky, whatever. And that, but because it's from a foreign country, that they have different regulations over there and stuff. So you have different kinds of risk. But anyway, yeah, we really want Bitcoin to take back this moving average and not do this. I'd be all right even if they did this, if they at least went up for a couple of days before they petered out. I just don't want to see another one of these right there. That's just bad. It's just a bad look. Go watch that Mike Coe video. He sounded pretty resigned to the fact that I think he thinks it's going to 7. I don't think he thinks 90 is going to save it. I do. I don't know, but I hope that, I think that maybe 90 will save it. But he sounded to me like that and that's where the MicroStrategy's what ifs comes in, because he was looking at if it went there, what would it do to the preferreds and MicroStrategies? And he was explaining how they would be affected, which ones would get a rate cut, which ones would be, and also what it would do to, he was also just trying to explain the market cap of MicroStrategies. Some people say MicroStrategies owns 1 million Bitcoins. And, but given where their AUM is, the Bitcoins are less than par. I mean, you could get a discount on Bitcoin right now buying MicroStrategies. And I believe he said that's not actually entirely accurate, because you have to consider the Bitcoins that are pledged to those preferred stocks. In other words, Michael Saylor used some of his MicroStrategy shares to finance Stretch, Stride, Strike. Anyway, go watch that. He explains it perfectly, and it's wonderful for any MicroStrategies or Bitcoin Bro. I couldn't recommend it enough, and I put it in the thing. Yeah, I can explain a diagonal spread, Dylan. I like diagonal spreads. All right, it's kind of a complex. I mean, but this is good. Okay, so let's put in one window. Let's say we're bullish on. Well, let's say we're bullish on bullish. That's fine. Okay. So let's say we go out to next week. The 21st is what, 2 days. So let's say we think bullish is going to rally. All right. So, and just to keep things simple, let's just say we want to buy a net the money option. So net the money option kind of gives you a similar profit and loss graph as the ULTY position. You have limited loss on the downside, but on the upside, it's basically, the performance of stock. Okay. So that's good. And a lot of people love, just buying calls. That's fine. The disadvantage is it's a debit. You have to come out of pocket to spend the money. And then if it doesn't move at least to the break even, and so right now the price is 36, but because you spent $171, you need the stock to move 1.7 points. So unless you get over 38.30, you lose money. So, or you have to get over 38.30 by expiration to break even. That's a disadvantage of buying a call. The time decay eats you alive. You guys probably know that, but I'm just reviewing. So here's what we're going to do. So I'm going to make a duplicate window, and we're going to do the same example, but we're going to do it as a diagonal spread. And I'll show you a couple of examples. So a diagonal spread, all that is it's also called a calendar spread, and it's where you buy a call, but then you sell a call. So that's like called a call spread. But when you buy a call in one time in one expiration cycle, and you sell a call in a further out expiration cycle, that's called a calendar spread or a diagonal spread. So right now we have the bot call at 36.5. So so let's say we're going to go out to we're going to sell a call. We're going to do it higher. But you can do a diagonal spread lower too. But anyway, we're going to do a bullish spread. It's bullish. So let's say we're going to go out and sell the 40 call. Well, if we did it in the same time frame, we have capped upside. I mean, and that's a very common trade. It's a debit call spread, a bull call spread, whatever. But the magic comes when you do it, when you hit change expiration here, and you switch this. Let's go out a month. We'll just go to the next week. We'll make the call, the out of money call we're buying won't expire for a week. Okay. Now, what this does is this is a calendar spread. So one thing it does, we don't have to bring as much money to the table. We can put it on for $30, whereas it cost $171 to just go out and buy a call. The reason it costs a little bit less is because we're selling a call. And so the call that we sold, especially because it doesn't expire for another week, is let's see, I'm trying to make sure I'm doing this right. Hang on here. All right. I'm sorry. So this is counter spread. We're selling. The thing is, we're selling a call that expires sooner than the one we're buying. So hang on here. Let's just get one. Okay. Yeah. So here's the advantages. This is a 30, you can put this trade on and it only costs, and you can do it for a credit. So you don't even have to come out of pocket. But the thing is, you lose money once it goes past the sold call. Let me do this a better way. Well, see right there, it says diagonal call spread, but a diagonal call spread means that the call you own doesn't expire until after the call you sell. So in other words, once we get to the 28th, this one right here, this 40 call that you sold, will be worth zero. Okay. So, and it expires. So that leaves you with this call. So it's a way to try to get long a stock at a cheaper price. I did a bad job trying to compare it to this. I mean, to make a fair comparison, what I would need to do is choose the same strike. So you could do it this way. You could either go out and buy a 44.5 call for the 5th. Okay, that's a better comparison. It costs you $66 to do it that way. Okay, but you have a huge area until you break even, and it costs $66. You could do a calendar spread, and you're still going to have to pay $67 for this, but you're going to bring in $86 so you can do it for a credit. But the thing is, here's what you're betting on. You're betting on that it doesn't go above 40 by the end of the 28th, and that's why the max profit is right there at 40. It's a kind of a tricky play. You want it to go up this week, but not go past 40. And then once this one expires, you still have this one long, and you can either hold this one, and if it keeps going up, you make money. But that's all the diagonal spread means you put them in different time frames. And you can also do it like this. You could also buy an at the money call, and then you could sell one in the week did you sell one that expires before? You have to, when you do diagonal spread, the one you sell has to expire before the one you buy. Brokers won't let you do it the other way, because then when the one expires, you're left short. So you have to sell the short week there. But a lot of people do diagonal spreads that look like that. And a lot of people do those before earnings. But basically what it's a bet on that the one that you sold, in this case the 40, decays at a faster rate because it goes to zero by the 28th. This other one will hold its time value a little bit longer. It costs more, but it doesn't go to zero till the 5th. And it also depends on what the stock does. That was a bad explanation, but anyway. Yeah, I do need to make UL2I go up. That was a terrible explanation. I need to, if you can email me and I'll try to make it a better one. It's maxconvexity@gmail.com, or I'll try to do it tomorrow. I got started on the wrong foot. I can do a better job on that. But yeah, let's go LFGY. What's crypto doing? What's crypto doing? So crypto is, it's gone up from, it hit like 88.5. Here we sit at 92. It's up. That's huge. That's huge. It only says 1.3%. It looks like bigger than 1.3. Hopefully by the morning, it'll be right here about 95. The markets will gap up and then just keep going. And this will all be just a bad nightmare. And hopefully I'll be mad at myself for getting salty. I really hope I'm mad at myself for getting salty. But by the same token, if we get up here to this line on crypto and peter out and go the other way, I'll be happy I got salty. But, you can't know the future. I was having to trade the chart that's in front of me. And once I got salty when I saw that we lost this low over here. When I saw Bitcoin go under 100 and keep going, I was like, darn, this could go to 75. If it goes to 75, I'll be darn glad I got salty. But you can't know the future. You got to trade the chart that's in front of you. All right, visual works great. Okay, I just got confused on which one was in front of the other, and if next time I'll tell it, I can explain it better. But anyway, all right, you could do it. There's diagonal trade is one of the most versatile trades. The guys on Tasty Trade, Nicky Batts, has great. He does diagonals for earnings trades, and he has really good explanations. You could, if you're more interested, you go watch him too. All right, so 703 RJC says LFGY 28.27 plus 105. That's awesome. That's awesome. What's ULTY doing after hours? Is it moving or blocks? Anyway, if you see that message before we sign off, put ULTY and blocks in there. Here's Michael Anthony. What's up, Michael Anthony? Michael Anthony plays bass for Van Halen. A lot of people don't realize that, but Michael's a world famous bass player. He has that Jack Daniels bass, and a really good guy. Now he plays with Sammy Hagar. Anyway, Michael, thanks for being here. You guys going to go out on tour this summer? I'm just joking. All right, DLO this year paid a special dividend of 51 cents that each dip that share rallied right back up. That's cool. That's cool. DLO with no debt, record earnings last week, and run to 14 to 16. Well, let's look at DLO. You showed me that before, and I said, what is that, Diagnostic Laboratories or something? No, and it's D-Local. I remember this. We talked about this before. I say I have a good memory, and I really don't, but I usually remember if I haven't seen somebody's name in the chat before. But yeah. So 151 million shares outstanding, trading into $12. Kind of a little bit smaller company. 5 small cap stocks with impressive growth and upside potential. D-Local falls despite blowout Q3 earnings. What investors are missing. Wow. Nice. That's a good looking chart. They definitely want to hold 1184. I mean, there should be buyers where they're at now if they hold, and the bulls want to take it to all-time highs, like you say, 14 to 16, and there's that descending trend line. That'd be the first step to get it over 14 and then eventually up to 16. Yeah, great analysis, Michael. ULTY's up 2%. Okay. I mean, I'll take it. I'll take it. Okay, so Dylan just started watching yesterday and today, hearing about them from you. Great learning, overall market updates and teaching. Yeah, that's kind of my favorite thing to do. And like I say, I love to talk options and stuff. The best way that I do it is whenever one of these trades puts on one of these ETFs will do a diagonal spread or a whatever they do, and then I'll take the actual trades and we'll put it in option strat. And we'll save it. And I have a bunch of them saved, and we can see how they actually do. See, ULTY caller, 1.9 million in Google. This is what I'm talking about. Well, that's their caller. So these guys had 200,000 shares of Google. They bought it at 275. They sold a covered call on it. They sold the 285 covered call. So they're capped after it goes to 285. So they're capped right now, but whatever. But then they bought the 250 put just in case. They did the whole thing for a credit. So this is how ULTY, they pay you with the credit, but they don't end up holding the bag. I mean, they could definitely lose money, but I mean, if Google, but only down to 250, then underneath that, they're basically flat. But yeah, so my best thing is whenever I evaluate the trades that a company's done, and then we can look at them the next day and see how they played out. Here's this 3-leg trade I'm talking about, this 3-leg caller that ULTY is doing. This is one that didn't work out. They put Salesforce in there, and Salesforce went the wrong direction, and that was a loser. But anyway, I'll update the new ULTY trades. I bet some of these trades they don't even have on. I put some of these trades on the 13th. I mean, that was 6 days ago. They probably closed out and rolled a bunch of those. But these more recent ones, I put on some ULTY trades, and they're all doing well. This NVIDIA trade, I forgot to title it, but this was, I'm trying to think which company. This was I don't know which company did this trade, because usually I put the company's name right before it. I may have just been trying to show a lightning spread. That's a lightning spread. And that's what I was talking about, how Blocks has. That's why Blocks goes down so much. They use this structure. So they have unlimited loss on the downside, but they also have unlimited gain on the upside. And so in a sense, I'm really liking kind of more what ULTI is doing more than Blocks, because they have similar upside, not quite as much, but they have capped downside. So yeah, there'll be more of that to come. That's my favorite thing to talk about. Let's see. Yeah, options masterclass. Exactly. Hey, thank you, Dylan. I appreciate it. I've never got a super sticker before. What do I do with one of those? I can star it, and then it shows up. I don't know how to run this. That's awesome. I've never got one of those before. I've got some super chats. Was it Froggy? Froggy gave me it was either Froggy or I forget Froggy and Grumpy mixed up, because they both have names ending in a Y. But I got a super chat from them like 2 days in a row or something. I was on fire last week. No, and I appreciate all those. And those super chats go into that thing I just showed you. That's part of the reason my revenue is doing better. Yes, I did see ULTI, and I've already forgot it was. Let's look at that, though. I did see it, and in fact, I already put it in this spreadsheet. So, or no, I think I forgot to. Let's just go to the website and see. It was 60 cents or something. ULT Rex shares. Let's just go check it out. Yeah, but I saw it after the market closed. I think I saw it in Twitter. They tweeted it. But I'm kind of interested in what the percent. Oh, it's 27 cents. Okay. They paid 35 the first week, 27 the second week. But the rate, let's figure out the rate on that. So if you paid 27 cents a week, the first one was maybe for 2 weeks, but let's just do this. So dividends 0.27, and then this will be the 52 multiplied by that. So that gives you a $14 dividend, if they keep paying at that rate, which they may not. I mean, it depends, but I'm just saying that's the way the funds figure it. They just figure the rate, and then they look at the current price. What's the current price on ULTI? It's low because it's been coming down. But also, as the price comes down, they also pay less dividend because they have less money to work with. You guys see that happening in ULTY, but also when you figure out the percentage, it makes it easier on the percentage too. So what is the price on this? It's like, heck, it's really low, isn't it? Because they lost like 15% in one day last week. I should know. It's like 17 or something. Yeah, there it is, 17.48. So then we could go back here just to figure out what rate they're paying at. Yeah. So then we could do 17.48. And then we could get the rate right here. Change it to a percentage. Well, it's 80%. You guys could see that. But so that's one way. That's like the current rate. If they could keep that dividend up and the price stayed where it is, it's about an 80% rate. But I think it's a more fair way to do it, to include both weeks in there. So the first week they paid 35 and used the starting price. Just pretend like somebody would have bought it from the start. That's the way I figure it on the max factor. I think it's more fair. But the rate, their dividend rate's 80%, and I bet it says 80% on their page because the funds figure it that way. But the way I usually figure it is, so we'll do 35. So what is okay? So okay, so it's 62 cents. So now we'll do. But that's for 2 weeks. So we'll do 62 times 26 because 2 weeks is, so we're going to go here, multiply that. times point, or we could almost, it's been 2 weeks, or we don't want to do that. We want to do that times, oh yeah, that times 26. Okay. So it's 1612, but now let's base that on a $25 starting price. I think this is a more fair way to do it. And then I guess we could just go like this and drag this down. Yeah, I think they're paying 60. The way I look at it, they're paying 64% if you bought it on day one and you're just holding it. But if you bought it this week, you know, it's $18 and then it pays a pay, you know, I guess you could buy it the day before it goes X and you're essentially, you know, get 80% or whatever. Or if you bought it this week. So it's the truth is somewhere between there. Boy, that's not going to be real popular around here. Crypto has no real use. I mean, I'm not going to fight with you, but a lot of people in here are going to. Anyway, but no, I know that's a very common thing. A lot of people say that. I'm not a crypto bro. I'm an option bro. All right. Rex generally only pays what they earn according to them. Well, but that's not true. I mean, there's a lot of nuance to that. Because that would mean their NAV would never go down. So when the market's down, you can look at FEPI. When the market's down, FEPI's NAV decays also. They don't. It's not like they don't pay if they have losing trades. What they're meaning is they pay a more reasonable rate that is more in line with what they actually make over time. But all of these are income funds. All of them pay no matter if they win or lose. It's just the ones that pay less. I can show you an example of that. And I love FEPI. I'm not knocking FEPI one bit. But that's just, I told you guys the other day of a way to do, a fund could actually just pay what they make, but none of them really do it. But some of them pay a more reasonable amount, a more realistic amount that's easier to overcome. I'm not disagreeing with you, or I'm not disagreeing with Rex either, but Curve says the same thing, but Howard's funds decay when the market drops. We'll look at TSLP. I mean, anyway. But they don't at the same rate or whatever. They don't have as much risk. I'll agree with you on that. So let's look at FEPI compared to, I don't know. We'll just look at it compared to the Qs. But let's say you bought FEPI, you know, in March, and then you held it till, you know, the tariff started to kick in and you got mad and you sold it on April 7th. You know, they didn't, I mean, so get this, they paid 94 cents and their NAV dropped $4. There's no guarantees in life. There's no guarantees in trading. All of these stocks, I don't care if it's FEPI, I don't care if it's triple QI. I can show you where triple QI decays. Or, you know, and it's not that it's a different kind, but it's because the market goes down and their dividend doesn't make up for it. I mean, people think that just YieldMax does that and just ULTY does that, but maybe they do it to a bigger degree, but they also pay more. So in a market that goes up, you're also rewarded more. It's just risk and reward. But yeah, they all do that. Check out this one. You want to see. I mean, I'm not denigrating Howard. He does a great job. He's one of the best in the business, but that you can't do anything about the stock going down. A covered call is a bullish play. When did Tesla go down? Let's look at Tesla's chart. Let's just pick the worst time to be in Tesla. Okay, so let's say you bought Tesla November 3rd and you held it to now. So TSLP, so we're going to go November 3rd. I think what they mean is they pay closer to in line with what they make, with what they have a chance of making, you know, something like that. I would agree with that. But yeah, so look, you know, this one decayed from 26 to 22 and just paid a 50-cent dividend. Blocks is a really good fund, but I'm totally underwater in Blocks. You know, but I don't go on Twitter and talk about that David needs to get arrested or, you know, the guy that he doesn't know what he's doing. I mean, he's betting long on Bitcoin. I knew that going in. I know the Blocks is long on Bitcoin, just like anyone that buys TSLP, you're long Tesla. Yeah, it pays an income, but the income may or may not make up for for the pullback. And in the case of a serious pullback, it won't make up for it. We could look at the same thing on any of them. I mean, triple QI is probably one of the best ones out there. I don't have a problem with triple QI, but let's buy triple QI in, March and hold it till April. And we'll compare it to the Qs. That's its parent asset, reference asset. Yeah, there's triple QI, dropped $7 in NAV. And that's always why I see people, a lot of people just don't understand how these work. And anytime I see an influencer and they talk about, this one doesn't have NAV decay, they all have NAV decay, or they all have NAV depletion, but what the influencer really means is they put out a video and they pick a period of time where the fund hasn't had any NAV decay. But that's because it's usually, if you look at it like Google, GOW, no NAV decay. Well, no, it has NAV decay, just not recently. I mean, or it's not decay. The decay's not a thing. Erosion's not a thing, but they all have NAV depletion, and they're all long the market. So, and they all pay no matter if they win or lose, no matter if the market's going down. But I think what people really mean is they have, people get that confused, and it used to drive me crazy, and now I don't even worry about it. But that, it's just math. It's just math. It goes back to the Ferrari example. Ferrari is a lot more fun, but there's more expense to owning it. So yes, triple QI is like a Toyota. It's good and stable and steady. It can still wreck. It can still, you still have to put gas in it and insure it, but it doesn't require as much upkeep as ULTY or something. ULTY is the Lambo, and ULTI is like a Bugatti or a Bugatti Veyron or something. I mean, ULTI is something else. I mean, but ULTY is like having a $200,000 Range Rover or $200,000 Hummer or something that's real expensive to maintain. I don't know. So you learned IVR on Tasty Trade. Well, good. That's an important. IVR is everything. IVR is the cost of, you understand because you watch Tasty Trade, but IVR is how much you can make by selling options. You find a stock that has, a 50% IVR, in theory, you should be able to make about 50% yield. Now, yield isn't total return, doesn't guarantee you're going to make 50% money profit. But if you can also pick a stock that's going up, your NAV will be pretty good and you'll get the 50%. So yeah. There's a lot of moving parts. The yield's very deceptive, but it's part of the equation. But the other part of the equation is, what does the underlying do? That guy syndrome, crypto, has no real, good. I agree. I mean, I don't agree on the no use necessarily, but I don't know enough about it to argue about it. But I agree it's crashing. I mean, I'm with you on that. I've been selling everything I can lately. I'm 20% in cash and 17% in inverses. So I'm only 63% invested in my model portfolio because I see the crash. I mean, it's definitely crashing, and it's been doing it for a while. So I definitely agree with you. The IVR is what these cover calls want for high yield, high IVR. Yeah, 100%. You said it better than me. That's what I was trying to say. But it's, it's crashing long-term more than inflation. They lost so much on a bad trade. I don't know which one you're talking about, but it's probably ULTI. I mean, ULTI was down like 12% in one day, and they didn't use protection. I mean, it's like going to a whatever. But you have to use protection. Always use protection. Come on. I mean, but they've started using it. But the first week they came out, I was evaluating their trades, and they had the same type profile as blocks: unlimited loss on the downside, unlimited gain on the upside, and it was just the wrong time to do it. Yes, Rex does like cushion, correct. Rex also uses monthly options instead of weekly options. That also helps with the mechanics of it. It helps. If you got into Bitcoin early, great. But at this point, the ship has sailed. I hope you aren't right, but it kind of looks that way. Tell you that Mike Coe knows a lot more than me, and he sounded real bearish on it. So I don't know. I always say it's always darkest before the storm, and no one really knows anything. A lot of these talking heads think they know something, but the market's going to market at the end of the day. And there's so many forces that drive it. Even the smart guys like Tom Lee get it wrong sometimes. Hey, did anyone buy any of that GRNI? It was out its first day today. So it's Granny Shots, which is his tech fund. And it's kind of the fund that it's, the fund, his fund of funds or whatever, but it has the companies that he believes in. Bitmine Immersion's a big part of it, which is doing terrible lately. But anyway, they came out with an income version of it where they own the same stocks and they sell options on those stocks. All right. There's nothing that blockchain that regular bank doesn't offer. Let's see. I'm very familiar with the tech. I got you. I'm like I said, I'm not trying to, and I'm not. So I'm very familiar with options. I feel YieldMax pays more dividends from the synthetic than premium collected from weeklies. I feel more, protect it definitely. So YieldMax is not, it does have its own intricacies and it's risky. It's risky. Does great on the way up, but I hear you. Okay, Bond, what's going on here? Let's hope it doesn't go the same way as tulips. I hear you on that. Stablecoin is good for banks to cut transaction costs and send. I mean, aren't some of the banks, having the banks kind of, I think here's what little I know, or it's my theory on it. I think when Bitcoin was introduced, it was a currency, for people on the internet, a digital currency or whatever. But I think as time's gone by, Big Wall Street has got their hooks in it and have started co-opting part of it and have are probably ruining it. It's probably different. I think it may be different than how it was intended to be. Now it's kind of evolved, into more of a traditional asset in some respects. I don't know. Let's see, NFLP from Curve, solid. I don't own it. Yeah, NFLP from Curve is everything from Curve is solid. Curve's a solid company. Rex is a solid company. Those are the Curve, especially, or if you don't like NAV depletion, excessive NAV depletion, Curve is a great one to look at. They do a really good job at trying to be realistic about the level of depletion they create from their funds. Curve is coming out with a Bitcoin fund. I forget what the ticker is, KBTC or something. I saw the prospectus on it the other day. Anything over 20%. Well, everything will deplete. But the higher, so at 20%, that it just means that the underlying has to be up. Here's a good way to think about it. These options are semi-capped on the upside. So if in a broad way of thinking about it, if a fund is paying you 20%, in Marcus's example, that means, let's say it's based on the underlying is, let's make it a better example. If fund's paying you 50%, but the underlying is MicroStrategies. So MTSY and their MSTY and they're paying you 50%. So they'll pay you the 50% no matter what. But in order for them to have stable NAV or increasing NAV, their underlying needs to make about double, between 1.5 times to double whatever the distribution is. So if a fund's paying 50%, you're also, if you think you're going to have stable NAV, you might, but you're betting on that company that they're writing options on is up more than the distribution they pay out, because they are able to catch some upside. So since they aren't totally efficient, you're really betting, if you get 50%, you're betting the underlying of that fund is going to be up 75%. So and if it isn't, they're still going to pay you, but it's going to come out, it's going to deplete the NAV, and then it's going to cause erosion or decay, whatever you want to call it. Spot on, Skeptic, absolutely. Yes, SBAR is a good one. SBAR is a good one. Own SBAR and just sell puts to the that's pretty good advice. I like that. What's RJC saying? Let's see. The more option trips with up and down, the more money made. They do harvest the volatility, but some funds, some ETFs that go straight up and straight down and straight up and straight down, they want volatility, but they don't want they want more of a steady volatility. I mean, funds can be too volatile. I really think some of these, might be too volatile. And some of them, the ones that everyone likes, like NVIDIA, is volatile, but not too volatile. It's just volatile enough where the option premium is juicy, but it's not so volatile it causes like weird issues with it. I mean, All right. You think that, oh, yes. Oh, my gosh, Bloom Energy. That's exactly what it was. I don't know why they didn't have on protection. I know I say this every night, and I show this same thing every night. Right there, it says enhanced weekly income. Yeah, they're doing that 60, 80%. Okay, we got you there. Check. Active management. Yeah, I guess check. But downside mitigation on extreme moves. Not the first week they were out, not with Bloom. They lost 15% in one day. I think they've learned their lesson. They have everything hedged off now. It doesn't mean they can't lose money, but it means they won't. They can only lose a certain amount. Personally, I think we're just in pullback. I hope you're right, Froggy. Yeah, there's Granny. I posted that. You love Granny so far. Well, good. And then there's GRNJ, which is junior grannies. I don't think that's income, right? That's just a growth fund with smaller caps. We got a disagreement here. Chad says Bitcoin's dead, going to zero in the morning. Oh my gosh. I better get more. As soon as the market opens up, I'm going to go 100% in Salty. Salty would make bank if Bitcoin went to zero, because it's a short fund and it shorts meme stocks. I'm going to short GR. I'm going to short, if that was really going to zero, I would short ULTI and go long Salty, and you'd be in pretty good shape. Or really, if it's going to zero, I would just buy puts on IBIT. Because, whatever. Max, what do you think about Granny Tom? Yeah, I know it. I'm more of an option guy than a stock guy. I like Tom Lee. I really haven't studied the stocks in it. And I think that he started doing, from what I know, it started not doing really good, kind of like ULTY, and he switched strategies midstream. He did a rebalance the other day and put in some more stable stuff, which is good. I think Tom Lee's a good manager, but all these guys, at the end of the day, it's still an educated guess on all of them. And they just need the market to go up. Now, none of these will make money if the market keeps going down. They're all bullish bets. The ones that sell options might lose a little bit less, but none of them will make, it won't be happy. BNY Mellon is now custodian for crypto reserves. Oh, okay. Yeah. Well, that's an example. You remember for a while, they couldn't even have an ETF based on crypto. And I think the first one that came out was GBTC or HODL or something, but it was a big deal just getting the mechanics working where a TradFi company could be a custodian. There's been demand for a crypto ETF forever, but it took forever to bring them out. And now they're all over the place. I like Neos mostly. Yeah, Neos is a really good one. Triple QI, SPY, good stuff. Yeah, you can. Yeah, exactly. Exactly. Neos is good. So here's my other tip. It's not just Neos. Neos pays 14%. Triple QI does. SPY pays 12%. You can pretty much go choose any fund that pays 14 or 12%, it's way lower maintenance. Like you could also get T-SPY, put it in your IRA and forget about it, in my opinion. Not financial advice. Just JEPQ. It doesn't mean they won't lose money, but you don't have to worry about where they're just bleeding money like ULTI or ULTY or blocks or LFGY. Yeah, I agree. The other ones are more tactical type things. It was all short where protection. Well, I don't know why they did that, especially because they advertised they were going to have protection. And I swear I evaluated the trades the first week and they were all just straight, no protection. They just brought the fund out at the wrong time. Maybe like I say, these guys, Rex is good. It's not like Rex is dumb. They know what they're doing. They have a great track record. But maybe they thought the pullback was over, and they thought, okay, they're getting a good deal. I really think these guys have good intentions. These guys, yeah, the fees pay a little bit, but these guys that are incentivized by growing their AUM because they get the same fee on the larger base. In fact, these funds don't even break even till like 35 to 50 million under management. For a long time, T-SPY just had like 2 million. I interviewed Psychotara the day it came out. I think it had less than 1 million. They start these but Psy is heavily incentivized to get the performance, to get the people in the fund. And I bet the guys at ULTI are just pulling their hair out right now. They don't want that to happen. They get compensated directly on their performance. I mean, for one thing, the guy that owns the company gets the 1%, and but not only that, the trader gets compensated based on their performance. That's the way Wall Street works. So they're heavily incentivized. Yeah, Granny's thematic diversified. I shouldn't have called it meme stocks, but it does have some meme stocks in it. It has, Bitminer Merge. It has some meme type stocks. Has anyone heard about Vibe yet? VYBE from our friends over at Roundhill. Right now they have meme out, and I heard Vibe's going to be a yielding version of meme, and it's coming out any day. Yeah, the yield's based of somewhere 13 to 16 based on the underlying. So that's going to be a good one probably. I mean, Marcus knows all the good ones. What about, do you like QUSA? How did that one work out? It's also kind of a lower yield, but yeah, SBAR's great. It has a great mechanism, but it also pays like go with the lower yield, other things being equal. And it's not the only solution, but it's part of it. That's just your estimate. Okay. Well, you watch these all day just like I do. I'm sure that's pretty close. Okay. You had an account at Chase and they never push. Yeah, they never push those. Huh. Well, I mean, they're good funds. I think there's better ones out there. I mean, I think probably the NEOS ones are better, but those are good. Those are good too, I think. ULTI portfolio manager Green. Yeah, I really want the target. Okay, I got a rumor for you. It's not a rumor. It's me inventing something in my head. On the Wolf Financial Spaces, I know Marcus listened because he told me about it, and I forgot to turn it on, but then I turned it on. Mike Coe was saying that Big Y's 1 year anniversary is coming up. Let's look at Big Y and see how it compares to Triple QI. Oh gosh. It's called Big Y, right? It wasn't around yet. And well, it's been around for a year. Okay, hang on. Let's just look year to date on Big Y. And anyway, I'm going somewhere with this. I'm gonna make up a conspiracy theory about Big Y. Big Y is obviously a good fund. It pays 12%, so it fits in the role of paying a low enough yield where it's a set and forget it type yield. Same as SPY, same as QI. And so, but you look year to date, Big Y has actually beat Triple QI. And that's impressive because Triple QI is a good fund. People never talk about Big Y and people never buy it because people hate yield max or whatever, but the yield max ones that pay the lower yield are fine if, anyway, but let's compare Big Y to SPY. I'm going somewhere with Big Y. I'm not just ranting about yield max. Yeah, that's kind of a bad look for SPY the way. Anyway, whatever. So Big Y is coming up on their. Let's see if it beats T-SPY. T-SPY is a really good one, also. Yeah, Big Y should absolutely have more AUM in it than it does. My conspiracy theory is Mike Coe said, "Hey, Big Y is coming up on their 1 year anniversary, and we have a special announcement coming up." I think they're going to maybe switch it to a higher target. And that's kind of what I hope. I don't know if I think that or I hope that, but I'm wondering maybe if they make Big Y a 25% target and they sell options on they do the same thing. It has the underlying as the 50 biggest stocks in the SPY, but they get a little bit more yield on it. Now it won't do as well on NAV, but it'll probably still do pretty well. I don't know if that's going to happen, but anyway, he said there's some big announcements coming up. So I don't know. What do you guys have any idea on that? I know Marcus heard that. That's my conspiracy theory for the night. How tempting is LLII? I mean, depends on what you think about Lilly. Didn't you say, was it you or was it somebody else from Houston that said there's a Lilly plant going in right next to you or out in your neck of the woods? Yeah, I really haven't studied LLII, but it's the same advice I give you on anything. If you're bullish on Lilly, I heard somebody on CNBC saying you'd be a fool to buy Lilly as high as it is right now. That the smart money's been made, whatever. Yeah, but I don't really study individual stocks that much. I like Lilly just because my granddad used to work for the company. I know it's a great company. But I also know that it was, I mean, it's just like there's no guarantees in life. You think Lilly would be the greatest company ever. But I mean, you know, because of the stuff you hear about it now. Let me show you. This is pretty interesting. I think. So let's get a monthly chart on Lilly. Let's get a long-term chart. Where is, or let's get a 12-month chart. Let's just do yearly bars. All right, we're going to have to put this on a log scale also, right? Because it's, but I'm going somewhere with this also. Hang on. Logarithmic. Okay. My granddad worked there from the 60s and 70s. He retired right around 1979 or something. But when he retired, he had stock options. And he didn't say he never sold any Lilly. He was against selling it because he believed in the company a lot. And that's how I learned covered calls, because he would sell calls on it occasionally. But in any event, so he just happened to retire, and it split 4 times in 10 years. I mean, look, it basically went from like 1 or 2 from the time he retired to 28, 4 or 46. And that's in 98. Okay. So it's the greatest thing ever. And my dad always tried to talk him into selling it because every penny he had was in Eli Lilly. And my dad's like me. He's conservative, and he's like, you know, he used to say, Dad, we need to sell some of that and put it in other stuff. He could have bought some Dell computer. He could have bought, there was all kinds of other good stuff to buy in the 90s. He could have bought the Spy. Spy was invented in 93, but anyway, but no, he believed in it, and he wouldn't sell it, and he was handsomely rewarded for it, you know, because it split 4 times in like 10 years. So, but the thing is, then he passed away in like 2004 or something. But, and then as soon as he passed away, my dad totally diversified it and put it in Vanguard and all kinds of stuff. But look, if my dad wanted to diversify it, or if my grandfather would have lived longer, Lilly, which is a great stock, went from 40 in 1998 to 2014 before you were made money on it, even though it's a great growth company, because it just wasn't a great time for Lilly or whatever. But if you held on to it through there, if my grandfather was still alive, he would have held on to it. And look at this. And now it's gone from 40 to, to 1,000. I mean, but just because a company used to be great doesn't mean it'll be great in the future. And I always think I was glad my dad diversified, but it took my grandfather dying for my dad to inherit the stock and diversify it. But nothing lasts forever. Apple used to be the greatest stock in the world, but there's a lot of stocks that were great and then were dead money for like 20 years. And if you would have just held on to it, so there's a lot more to buy and hold than just buying and holding. Anyway, okay, it's right up the road. I thought so, Chad. Does Biggie pay weekly? Yeah, no, it's probably monthly, I think. That's probably why he doesn't have very many assets under management. I know a lot of people like weekly. Maybe that's the big announcement. That's what it is. They're going to pay. That's what it is. I just figured it out. Of course, they're going to go to weekly because they have their feelings hurt that they doesn't have more AUM, because everyone says we want more stable NAV, and they design ones with more stable NAV, just by cutting the dividend basically, and then no one buys them. But that's what it is. I guarantee you just figured it out. All right, Chad, your wife's a farm tech at Memorial Hermann. She told me to buy it, so I'm not. So you aren't listening to your wife? You better listen to your wife. Everybody knows that Granite Shares has done reverse split. Oh, I didn't know that. Does everybody know if Granite Shares has done reverse? No, I don't, not that I've ever covered, but they will though. I mean, anything that pays that much there's no magic money. The money comes from somewhere. They pay a triple digit. One of two things is going to happen. Either their underlyings have to also be up triple digits every year, or else they will experience excessive depletion, and they'll end up having to do a reverse split. I'm surprised some of them haven't already, but I don't think they have yet. And I'm not talking about Granite Shares, good company. It depends on what you need. Depends on what you're looking for. I think YieldMax is a good company, but it's not for everybody. But yeah, I don't think all Granite Shares. Well, let's look at let's look at XBTY. That's going to be the first one that has to do it probably. Let's get it off monthly, and let's go to days. Yeah, Granite Shares has a bell ringing ceremony, and I didn't get invited. I'm sore about that. It is 2 days before Christmas, but it'd still be nice to be invited. I might go if I got invited. All right. So this thing, it came public at 15. That's kind of a low price for one of these companies. Let's actually turn off dividends, though. Yeah. So actually, it came public like at 25, probably. Yeah. With the dividends, it's probably got about $10 in dividends. So they adjust the chart. That lowers your cost to 15. So they start the chart from 15 if you want to chart it with dividends paid included. This is without dividend paid. So they've already bled off half their value. So they'll split when it gets under 5. Now they won't have to if Bitcoin will rally, because this will stabilize or it'll stop going down as fast. But it's just because it pays so much. What else do they have? I mean, I bet do they have an MSYY? I bet that one's not doing well. They don't have an MSYY. They have a COYY. I bet that's not doing well. Yeah, that one came public at like 25, it looks like, and it's at 10. So how long has it taken to get there? Since July to November? You know, I mean, so let me try to show you this. So here's a chart of Bitcoin over the same time period. So when they came out, remember, they're bullish on Bitcoin. So they're bullish on Coinbase, my bad. And I don't know what the yield is, but it's gigantic. So say the yield 75. So they really need Bitcoin to be up like 150 for the NAV to go up. And for the NAV to be flat, that Bitcoin should be up at least 70%, maybe 100%, something like that. So let's see how Bitcoin's done. Bitcoin, I know this in Bitcoin, but it's HIBIT. Bitcoin, since the time Coinbase, since the time they brought it out, really hasn't done that well. It went from 66 to whatever that, it went up a little bit, and you can see that their NAV didn't drop as fast. But then as soon as it goes down, the dividend still comes out. They still pay the dividend. Every one of these companies do, but they're long the company too. So they still have to experience the loss. But if Bitcoin keeps going like this, they'll split by, I don't know, probably, it depends, but I mean, probably next January maybe or something. Hopefully Bitcoin won't keep doing this. If you think Bitcoin is going to keep doing this, or Coinbase and Bitcoin are similar ecosystems, but yeah, it's just the math of how it works out. But Granite Shares is up there with YieldMax as far as having more reward, but with, the higher dividend, but with reward comes risk. There's no way around it. No way to get around the reward and risk equation. Yeah, I'm sure it is tempting. I just don't know about that. Even with me, I just don't believe in the single stock ones, because if the single stock, Coinbase used to be a great company, but lately it's gone down because it's a single stock. That's why I just think the indexers are better. Go get you GPTY, go get you FEPI, go get you Triple QI, go get you something based on an index. All 100 stocks can't drop at once. But when you have one stock, it can definitely, one stock, even a good stock like Tesla, has bled off like 70% of its value or 60% of its value twice in the last 4 years. So you've heard the same stories with Aflac. Yeah. Okay, what's the top high yielder? But there's no such thing as with NAV erosion. Only hear about the bad ones. What are the good ones? Well, first of all, there's no such thing. I mean, it's really depletion. The NAV is the dividend, the distribution. It's not really a dividend. The distribution, the money they pay you, is deducted from the NAV. That's step one on all of these high yielders. Step two is that these funds also track the underlying. I mean, to some extent. So you have two things. So there's really no such thing as no NAV depletion. They all NAV deplete, but there's two elements. So they all deplete by the amount of the distribution. Some of them have stocks that they're on that go up, And that would be like, let me show you an example of that. If you have a stock that goes up, you'll have stable NAV because there's two parts of the equation. So what's the stock like Google, like GOOW, or I'm going to use GOY because it's been out longer but it could be GOW. Then let me overlay the chart of Google down here. Let's put Google right here, the parent company, because it's selling options on something. And if the thing it's selling options on goes down, you'll get the depletion plus the fund will suffer because it's tied to the underlying. So let me show you this. So we'll look at Google. So this thing has been incredible. Google has gone back in May from $150 to basically it's doubled. It looks like it's close to 300 now. So what that's done for that's done for this, the high yield company's gone from 10 to 14. Okay. And at the same time, you're getting the dividend. So your NAV has gone up and you're getting paid the dividend. So that's an example. There's no such thing as no erosion, no depletion. There are such things as ETFs that are on underlines that are going up, but they all deplete by the amount of the dividend. So another thing is if you don't want easy way to think about it, if you don't want NAV depletion or don't want a lot of it, choose something that pays 15%, 10%, choose something that pays less because then you have less depletion just mathematically. Or choose something that the underline is going to go up. It's also a bet on the underline. Granite shares, XX short Coinbase. Yeah. There's a lot of leverage funds reverse split all the time. And leverage funds actually really do have erosion, but these high yield funds really don't. It literally is depletion. A leverage fund really does. Depletion means depletion. You see the high yield funds, they deplete on the day of their dividend. If they pay a 50% dividend, their stock's down 50%. Well, lots of the funds will recover the 50 cents depending on what the underlying does within the week or something. That's depletion, and it refills or repletes. Depletion and repletes. I don't know if replete's a word, but erosion is something that goes and it never comes back. My house is on the side of a hill and it eroded into the ocean. That hill's not going to grow back. That's erosion. The stocks that have erosion are leveraged ETFs. Let me show you what erosion is. Let me give you a good example of erosion. And these are never coming back. All right, UVXY. And it's because it's leveraged. And it's usually the leveraged and inverse funds that have that erosion. But erosion is a thing. It's just not a thing on the high yield ETFs. People get confused and call it the wrong thing. Well, it's fine. But the high yield ETFs are actually, what they're doing is they're depleting. And the ones that have underlines that go up will refill like Google, like GOW. It's not having any visible erosion. But let's look at this like on a weekly chart. So this is leveraged and this is inverse. It's UVXY, but that's erosion. That's erosion. Look, it went from 4 million to 11. And and you're thinking, how can it do that? Well, they just reverse split it constantly. And you can say the same thing for leverage stuff. Like, what were you saying? There's leveraged inverse. The leveraged and inverse ones are the worst. Let's see what your example was. We'll look at some erosion. Granite shares 2x short coin daily. When I was talking about if any of the Granite shares are split, I'm always thinking of the covered call funds. That's kind of what I specialize in. But yes, and I said none of them have reverse splits yet. But yes, they're just the leverage funds. Yeah, these things are a mess. So what's the ticker on that? Let's see. Let me go. Maybe I can find it here. Maybe I can type in. Okay, Granite shares 2x long. Granite shares yield boost. We need the shorts. Long, short. So I bet the short SMCL is not doing really well. I bet that one's eroding like a mother. Um, well, let's just look at the SMCI short 2 times, or I bet, well, but any of these leverage ones, they really do have erosion. The fact that once they start going down, they aren't coming back. They'll just reverse split. There it is, 2x short. Yeah, you put CONI in there. I saw that. Gosh darn it. Okay. Here's erosion. That's the fund that erodes. It's look, it's gone from 550 in 6 months to 30. And that's not really mathematically possible. It really probably started at 50, and then when it gets under 10, they reverse split it back to 50, and then it gets, it's just that, that's erosion right there. That's why the fund managers always push back when people say these erode. I mean, because it's like you'd always hear that Eskimos have like 100 words for snow, because in their culture, snow's everything. Well, when you're an option trader or a fund manager, there's a distinction between erosion, depletion, decay. Anyway, when people start talking about stock, yeah, true. That's a good. Whenever your cab driver, says, "Hey, do you have the latest AI stock?" Back in the 90s, whenever we were in a bubble, lots of cab drivers had their own internet companies and had their own. I'm starting an ISP, or like they would. Lots of times, people would buy domain names and speculate on domain names and flip them for for big money. Yes, that's always the sign of a bubble and stuff. I don't know we're quite there like we were in the 90s. That was more bubble-ish than now. Hopefully we have a few more years left in it, in the AI revolution. Yeah, the Granite shares won short on NVIDIA. Yeah, because NVIDIA's got nothing but go up. NVD1, here's an eroding one. Let's just punch that in. It's always leverage. The leverage, and it's boring to explain, but it's the leverage causes the erosion. Oh, that's the long. What was it for short? NVD, was it S? Leveraged. I just looked at it. I can remember people's names, but I can't remember a ticker. NVD1. That's why I put L. But anyway, yeah, so they had 3 and they were all shorts. Yeah. So the shorts will reverse split in a bullish market, right? But then the longs will reverse split in a bearish market. The leverage longs, it's leverage. There's something called a daily reset. Look it up. It's not that interesting to talk about, but the leverage reset causes something called volatility erosion. That's something that none of the high yield funds have. ULTY doesn't have it. ULTI doesn't have it. They have excessive depletion. That's it, but it's a distinction. All right, Udar, what are you saying? They need to find an equilibrium between yield and NAV stability. Otherwise, they keep reverse splitting. These funds are scaring away investor. Yeah. No, I hear it. I hear you, Udar. I'm with you. They are definitely scaring away investors. I'm with you on that. We've seen ULTY go from, 3.2 million under management to 1.6. Yeah, it's not their goal, and they aren't going to do it. I'm agreeing with both of you. I agree. Udar made a good point, but yeah, that's not their goal. They aren't going to do it. They're going to do it, but what they're going to do is they're going to bring out funds. They're going to bring out their target 25 and their target 12, because it's just math. It's just the ones that do the daily options just pay too much. It's just too bullish of a bet. Granite should have waited on the. Yeah, they probably should have. All right, Max, you should do a battle of ETFs, ULTY versus ULTI, or SPY-I and SPY-T. That way we can, yeah. Well, the ULTY and ULTI is an ongoing thing. We look at that every day. That's the diversified darlings. And we're also comparing K-Yield, blocks, and the other funds that are like that. So that's a done deal. We do that every day. And I'm going to start making a special show just for those funds, blocks, ULTY, ULTI, and K-Yield. But yeah, so that's a done deal. On SPY-I and SPY-T, yeah, I should do those types of things also. Last time I checked, SPY-I was doing better, but let's just run them really quick. They're similar though, and we can also compare SPY-T and XPay. The last time I checked, I think XPay was doing a little better. But these are all basically, these pay like 15 and 20%. So they have less depletion and less probability of getting into a serious NAV problem. They're more set it and forget it. But let's just see here. So we just run it from January 1st. SPY Eyes beat SPY T. Now, to be fair, though, SPY Eye only pays like 12% and SPY T pays 20%. So if you needed 20% for some reason, even knowing that SPY T doesn't have quite the total return, it might work for some investors. Look at the NAV. The NAV on SPY T has gone from 19.10 to 17.69. That's down like $1.20, but it's paid $3.12 in dividends. So its dividends are more than made up for its NAV going down. But SPY Eye, on the other hand, doesn't have as much depletion. Why is that? Because it only pays 12% instead of 20%. So you can see it here in the starting price, the ending price. In fact, it's actually managed to squeeze out a little positive NAV, and it's paid a $5 dividend. It looks like more dividend, but it's on a bigger amount. So actually, on a percentage basis, SPY T pays about 20% a year. SPY Eye pays about 12% a year. So in any event, but yeah, that's a great comparison. But SPY Eye is the total return winner. Let's check SPY Eye against XPay, or let's check XPay against SPY T, because they both pay 20%. So there's no excuse. There's no saying, well, this one pays more. So these two, in theory, the winner of this, should be more of a fair match. And it is XPay from Roundhill. Great job. XPay's up 11% year to date, and SPY T's up 8.9%, and they pay the same yield. So there's no excusing one of them and saying, well, this one pays a higher yield, so it's natural it does a little bit worse. But once you learn that the yield and the higher the yield, the worse the NAV does, other things being equal. Have I seen Stacked? Yes, I'm supposed to have him on the show. The guy that's the founder of that. Yes, I have seen that. BTGD. Yes, I've seen all of that. I'll make some content on it. But yeah, I've looked at BTGD 100 times. I mean, BTGD is awesome. It doesn't pay a yield. It uses leverage because it has 100% of each. I'm not saying it's not cool, but I try to focus on the yield-based ones. But yeah, it's Bitcoin and gold together. I mean, it's awesome. But let's see how it's done compared just to IBIT, because Bitcoin's been in the dumps, but maybe the gold has held it up. So let's compare Bitcoin and gold to IBIT. IBIT doesn't pay a yield either, and neither does this. So, or if it does, it doesn't pay a big one. Yeah, and the Bitcoin gold is higher because it's half Bitcoin and half gold. You can see Bitcoin year to date is just flat. See, IBIT year to date is totally flat. So this Bitcoin GD, all of the return from this fund came from the gold portion of it. And let's prove that. Let's put in the gold portion and see how gold's done year to date. We'll look at how gold's done year to date versus how Bitcoin's done year to date. Yeah, gold's up 52%, Bitcoin's down 4%. They just smash them together and they have a fund that's up, 25, 30%. That's a good fund. It's a growth fund, and I just kind of specialize in the option income funds. All right, Dylan, you're saying Hui and Palti, good depletion compare. Yeah, because they pay similar. Yeah, good. You're right. Now, then there's a third wild card, though. One of them's based on Hood and one of them's based on Palantir. So you could kind of excuse one of them if, like, Palantir's had a bad quarter and Hood's had a great quarter. So, but yes. But that's why XPay and SPY T are a perfect comparison, because they're based on the same underlying and they pay the same depletion. But just from a math perspective, you could say, hey, these have the same amount of depletion. Yeah, Hui and Palti. So let's run that. Let's run those. So Hui's done a lot better, but what do you bet if I put a graph of Robinhood up versus a graph of Palantir, that Robinhood's done much better? But yeah, that is a more fair one, because look at the dividends. When you could just eyeball it, this one paid $34 of dividends in a half a year. So if that was a full year, it'd be $68. Okay, so it paid $68 on something that cost $52 initially. That's like 140, 130% yield, something like that. This one paid $30, $31, so it'd be $62 if it was a full year. So it paid $62 on something that initially cost $67. So that's about 90. But they're both paying way up there. And the fact that HOOY pays even more, even has more depletion and still does better, that tells me one thing. That tells me that HOOD's done a lot better than PLTR. So but let's run that and see if that's correct. Because these are definitely based on the underlying. They need the underlying to go up or at least not greater. Yeah, and so Hood is up. I mean, they're both good. Hood's up 190% and Palantir's up 120%. And there's no slouches in that audience. But yeah, that's a more fair comparison. I agree with you. NFLP is yes. NFLP is a great one. Anything with a P at the end of its name is Curve. And yes, it's a great one. I have no problems with that. That's a great ETF. Here's a way to look at that. So we'll compare NFLP to NFLY. NFLY is not bad, but it's going to have more depletion because it pays like twice the yield. So it'll probably have less total return. But if for some reason you want a higher yield, you might like NFLY. But yes, NFLP is much safer. So let's just run it and see. Now, actually, though, when we run it year to date, they're about the same. But let's look. NFLY paid $6. We'll just pretend like this is a full year. So it paid basically $7 on 18. We'll add $1 for the extra month. So it paid like $8 on 18. So that's about 40% out of NFLY. I bet NFLP pays 30 or 20, but let's see. NFLP pays 6, so we'll make it 7 for the extra month. 7 on 34. Yeah, 7 on 34 is 1/5. That's about 20. So this one pays 20%. So it only has 20% NAV depletion to try to overcome. And this one has more NAV depletion to overcome. So a lot of people just want to look at NAV and don't want to talk about the dividend. So if you just want to look at NAV, NFLY, the one with the higher depletion, its NAV is down from 18 to 14. Now, so it's down 4, but it paid a $7 dividend, so you still made money. This one's NAV, because it has less depletion, same company, less depletion coming out of it. It managed to go from 34 to 34. It has stable NAV, so-called stable NAV. But it paid $6. Yeah, there's no losers there. Those are good examples right there. That's a good way to compare them. Replenish. Yeah, replete. What am I saying? Of course, replenish, replete. Gosh, deplete and replete. You could say deplete and accrete. Accrete's kind of the opposite of deplete. Something depletes and then something accretes. When you loan money to a friend and he's paying you interest, you're accreting, you're whatever, But yeah, good call. Is XBTY never? I mean, XBTY pays 100%, or 200%. Yeah, if I pulled it up there, and so it has two things going against it. It pays a high yield, and its underlying is Bitcoin, and Bitcoin's been in the dumps. So yes, it's gonna, it's definitely, it has depletion, and it's not doing well, but it'll be doing great if Bitcoin goes back up. Anyway, all right. Pete and Repeat are in a vote. Pete fell out. Who was left? Repeat. Pete and Repeat are in a vote. Pete fell out. Yeah, Repeat. CONI. Yeah, I mean, we could look at CONI. I mean, CONI, what's that? What's CONI? Which company is that? Is that Rex? Or I thought Rex was COII. I mean, Rex is COII. CONI is Granite. Yeah. Okay. 2 times short Coinbase. But now, yeah. This one, we've already, and that one is, that one's depleted. That one's gone from 600. We looked at this one. This one's gone from 600 to 31 in 6 months. That one's definitely erosion. The ones you have to worry about on the erosion are the double leveraged, triple leveraged, and inverse. And just if you want to think about the broad scheme of things, and anything that pays more than 100. I mean, just throw that into the same category. It doesn't matter if the word's not technically correct. Yeah, that's just, it's in the high risk category. Deplete and replete is a good one. Yeah, and redeplete. Yeah, that's what some of these funds do. They deplete and then they redeplete. Yeah, NFD. Yeah, let's see what NFD is. Or NVD. It's just it's Defiance, right? Yeah, NVD's. Oh, it's Granite shares 2 times short NVIDIA. Let's look at that. Yeah, that thing's gone from 700 to 18. Wonder how many. Oh, there's the reverse splits. You can see right there. It's only reverse split once. It came out. It came out in 2024, and it made it for a while without reverse splitting, but it finally reverse split 1 to 25. But then you can see, look, it actually, even with as much depletion as this thing has, it actually went up for a while. So what do you want to bet that if I overlaid a chart of NVIDIA on here, that NVIDIA, and this is short NVIDIA, but NVIDIA must have really cratered during that time frame. Yeah, and look, the high was April. NVIDIA did crater into April. So even these ones that have a large amount of depletion, erosion, whatever, they can go up if the underlying cooperates. This way you could have bought it here, and if you would have sold it right on the April low, you actually had positive NAV. Yeah, there's 2 things going on at once. There's the size of the depletion, the size of the dividend, and the distribution yield, and then what the underline's doing. A lot of people miss out on the underlying part of it. You have to factor that in too. Looked at Ape compares MicroStrategies and Coinbase. Yeah. So I bet this one's been doing bad. Let's compare it to the Qs. It did well for a while because we did have a massive run up. That's why everyone thought ULTY was good, because they didn't understand it's also dependent on the underlying. And we had a great rally from April. The whole market did from April to July. And yeah, everything did well. And this thing went crazy. But then now that's reversed and it's gone the other way. Whereas if you just would have bought the Qs, you wouldn't have had, because the Qs don't pay a dividend. So you have no depletion. Plus it's based on 100 stocks. So it's not going to be as volatile. You wouldn't have made as much money in the good times, but you also wouldn't have lost as much money in the bad times. Or you can also, you could also put triple QI on there. Lay's pairs NVIDIA and AMD. I know I'm still going. Can you believe it? I'm trying to get to the end of this, to the end of these things, but these guys won't stop asking questions. You're leaving? Oh, you're not leaving. Yeah, I got you. NVIDIA holding 196. That's great. Hopefully, really, even before any of this happened, I'm telling you, the one sign of life I saw was that even though the market didn't do great today, VIX was down. And VIX being down, when VIX is down and market's down at the same day, lots of times that's a sign of a bottom. And lots of times the sign of a top is when VIX is up and the market's up, because they both can't be right. And a few months ago, or like I think in mid-October, in late October, we had several days in a row where VIX was going up, even though the market was still at all-time highs and creeping higher. That's a sign that it might reverse. And that's about when I started when I started de-risking a little bit, because, but you can learn a lot by just following the VIX. The VIX can help confirm turning points and stuff. So I don't know, just know it's a science, or it's an art, not a science. We'll see. I know we did Coney already. I'm sorry. I forget. I remember you guys' names, but I can't remember some stuff. NVIDIA ended at 196 today in after hours. That's great. I love that. That's wonderful. How is SPX? I don't think trades after hours, but we can look at ES, which is S&P futures. SPX does kind of trade after hours. They have SPX options that you can now trade 24 hours a day, but I think it's not really liquid. It's hard to get a quote on it. But if you want to see how SPX is going to open, you look at ES, which is S&P futures, and it's looking great. These are 30-minute bars. Look, we're on an all-time high for the night. I mean, right here's where we opened at 5 o'clock. You know, the market closes or between 5 and 6 Eastern time. It closes every day at 5 for an hour and it stays closed till 6. It's not like Bitcoin that trades 24/7. So it closed at like 6,700 and then it opened an hour later and started going straight up. And we've gone from 6,700 to 6,750. We're already up 50 points in the ES. So what that means is the SPY, if this holds, the SPY will have a huge bullish gap in the morning. It's been a while since we've had a bullish gap, but you know that's a great first step. That is a great first step. Asia market's mostly up. Correct. Should be a big day. I'm all about it. Triple Qs are up 2%. All right, evening bank account bonus central. I don't know if you're getting here or leaving here saying goodbye. Look, I'm all the way to the end of it. Oh gosh, I thought I was, and you guys just keep it. Yeah, I know it is late. I'm trying to get the end of these. Good to know about VIX in the market. Yeah, there's a lot of stuff on Tasty Trade where they explain that there's all kinds of videos out there. The relationship between VIX and the market. Weren't you saying, Dylan, you learned about IVR from Tasty Trade? VIX is the IVR or the IV of the SPX. That's all VIX is the IV of the SPX, basically. It's the implied volatility of the SPX. So you can see if people are putting on hedges or taking off hedges. But the other thing, the only thing that's confusing about it is it's the inverse to the SPX. When VIX goes up, that is bad for the SPX typically. And when VIX goes down, that makes the SPX rally. Okay, Walmart earnings tomorrow. Yeah, good indicator. 6, 7. What does that mean? 7. Am I done? Whew. Boy, I'm done. I've never talked so much in my life. There's 78 of you guys here. These live streams are getting bigger. I think I had 80 at one point. I'm happy to stay here, and I love to teach, so I'm happy to stay here and answer questions all day long. I don't know if it's my longest one. We've had some other long ones too. I'll look at my records. All right, guys. Well, I promised I was going to look into ULTY tonight, but now I'm pretty tired. I'll probably go to bed and look into it in the morning. But I do want to start showing some ULTY trades, and so I'll try to do it tonight or in the morning. Are you going to take off your inverse if the market stabilizes? I don't know. Let me think about that. I mean, at some point I might, or I might cut back on it. What I might do, I kind of like Salty. What I might do is I have like 13% YQQQ. I might knock 5% off YQQQ. So it would be down. YQQQ short the whole market. So I'd be down to like 8% on YQQQ, 5 or 6% on Salty. I might lower it. But I'm just gonna have to take it one day at a time. ULTY did good to add NVIDIA. Yes, and they added Google last week before Google got put into or did something good, before Google did a deal or something that made it go up. Yeah, they've made some good moves and they've made some bad moves. I mean, you know, they made some things that didn't work out. They put Salesforce in there to stabilize everything, and it went down. They put Costco in there as a stabilizing force, and it went down. Just because the fund's more stable doesn't mean it won't go down. It just means it doesn't go down as fast. So anyway, Berkshire bought Google. Good one, Froggy. Yeah, I said they merged, but yeah, of course, it was Berkshire. That was right. And I think they sold Apple. What do you guys think about this? You know, they always say, I'm always telling you guys, it's a science, not an art. No one really knows anything. They know people like the guy that runs Granite Shares and the guys that run Yield Max and the guys that run Round Hill. They know more than us. I'm not saying that, but still, they're making educated guesses. The guys who run Rex are great, but they made maybe a bad educated guess. Where's I going with that? Michael Burry last week and Peter Thiel this week. Both of them dumped their NVIDIA and they dumped their Palantir. Michael Burry closed his hedge fund and took a private or whatever. I'm not saying he's lost money, but I'm saying those guys are wrong all the time. You know, those guys are wrong all the time. And I think both of them made bearish bets on NVIDIA. And tomorrow morning, they're going to probably they're probably going to have to cover or something. A lot of people have. So those guys, even as smart as they are, it's still an educated guess at the best case. Apple does not seem to be innovating that much. That's what happens to companies. Companies have a lifespan, just like a person. Apple between 99 and 2012 was the greatest company in the history of the world. But then it just kind of got stale, and then competition gets better. You could even say the same thing about YieldMax. YieldMax was really great 2 years ago when it was the only show in town. Since then, there's been other companies like Curve come out, and they do what YieldMax is doing, but they do variations of it. And a lot of people don't like YieldMax anymore, but 2 years ago, everyone loved it because it's the only show in town. But it's the same thing with these funds. If the funds don't innovate, and YieldMax is innovating too, but if they don't innovate, at some point, they'll have to close down the fund. And so they're totally incentivized to try. I promise you, they aren't. People always say on Twitter that, they don't actively manage. They need to roll their puts and stuff. I mean, I promise you, they've thought of that. I mean, it's just because they can't predict the future. They roll it sometimes. They don't roll it sometimes. Anyway, they tried making a car. Yeah, I forgot about that. And nowadays Apple just quit innovating. Lots of times companies will get rich just like a person, and they'll get, all their engineers are already multimillionaires, and their senior management, Johnny Ives, the guy that designed the MacBook Pro and is the product designer, he is retired, found his own company. He bought Steve Jobs' G4 with his Apple stock. He had enough Apple stock options that he's like worth $500 million or something. He's flying around the world on a G4. So anyway, Apple lost that talent. They had the best talent in the world at one point, but after 20 years, and all their engineers and stuff are worth $100 million, and they're off doing their own thing. They're sailing around on a yacht in the south of France. It's the same thing with people. Lots of times people will get rich and then just quit trying. Apple spent $12 billion trying to design a car. And I really think when Steve Jobs died, that was a big part of it. I think Tim Cook's done a good job, but they don't take risk anymore. Apple doesn't have an AI product, and they're getting left behind. I will say this. I thought Facebook was not a great, I don't like the social network, whatever, but Facebook has innovated. They remember for a while they got into the glasses, and that was a flop. And then they were going to do the metaverse, and that was kind of a flop. But the past couple of years, they've started to innovate again. So you have to constantly be innovating and constantly be bringing out new products. And that is the same thing that happened to YieldMax. They brought out the products, and they were the greatest products anyone's ever seen. No products ever did that kind of stuff. But then you have companies like Roundhill that are smaller, and they're hungry, and they sit there and run the numbers and try to figure out a better way to do it. And they take Roundhill took a lot of AUM from YieldMax. Roundhill did a great job. And then Curve, is taking some, and everyone wants to knock off the big dog on the street. Granite Shares is getting a lot of AUM also. It's just like a poker game. There's only so much money in the world. And, in these companies, it's like a big poker game. If they can make the most innovative, best product, they can win more pots, and they can make their stockholders wealthier. It's like a poker game. It reminds you, Apple bent the knee on AI, and they asked Google for help. Yeah. Apple is, but also Apple, I think at one point had the biggest cash position that any company's ever had. That's the other thing. Sometimes a company will get so big, they can't even there's not enough investments for them. They just have all cash. And then what they start doing is they start doing stock buybacks. And people say once a company starts doing stock buybacks, it means their innovation's over. It means they don't have any better ideas to invest it in. But yeah, that's a good point. Ford also Ford is also a great company. You may not think it is, or it doesn't seem like it may not be, but in 2007, 2008, like GM and Chrysler were always out trying to innovate or whatever. But then the financial crisis came, and they were over leveraged, and they went broke and had to have government bailouts. Ford was just kind of the old boring company, never innovated, but they had $40 billion of cash, or they had just a gigantic amount of cash, and they made it through the financial crisis without having to get money from the government. And anyway, so Ford was the big cash company a long time ago, but lately it's Apple. I remember Apple, like in the late 20 teens, they just had so much cash, they didn't know what to do with it. Let's be honest, who was looking forward to Siri AI? Yeah. I mean, Apple does make, they do make a great MacBook. I mean, the Macintosh line was incredible. The MacBook Pro, even still, those products are still top of the game, but they've, but their phone has kind of lost some of its luster. It's still, other people have caught up with them in the phone and surpassed them in things like AI. And, also Apple used to be the only show in town with iTunes. iTunes was a big moneymaker for years, but now we have Spotify and, we have other products that have taken market share. You remember Apple getting a lot of crap because they refused to bring a huge chunk of the money back. Yes, exactly. That's why I'm saying they had so much money. They invented a company in Scotland, or they founded a company in Scotland to do some kind of basically a money laundering. It was legal, but they would show the income and put it. Yeah, it was crazy, and it was basically a tax avoidance. I mean, but it was legal. These companies also can hire the best attorneys and the best they have the best of the best. So they do all kinds of crazy stuff. Absolutely. All right, guys. So I'm getting tired. I'm going to get out of here, but I think it's been a good show. I appreciate y'all being here. There's still 78 of you guys here. Anyway, but I love talking about business history, which is what we've kind of getting into lately. I've watched CNBC every day for the past, 30, 40 years. So, all right, guys. I appreciate it, Chad. You guys have a good night. I'll let you guys get out of here. It's late where Marcus is at. It's 10:30. You need to get to, Marcus needs to get to bed. His fiance is probably wondering where you are. Go jump in bed, Marcus, and I'll talk to you guys in the morning. Thanks for being here. Thank you, Dylan. Thank you for being here.